Okay, so once again, welcome everyone. This is the How to Grow as a Trader with Darwinex Zero webinar. My name is Martyn Tinsley and I'm joined today by Juan Colón, who's the CEO of Darwinex. And between us, we'll be providing more information about Darwinex Zero. We'll be sharing tips and guidance about how to get the most from this new service, but also opening the session up at the end for Q&A, so that you can get answers to those outstanding questions that we don't already address within the webinar. Behind the scenes, Alethea is going to be monitoring the chat for all of your questions. And so if you do have anything to ask, then just put those questions into the chat window and Alethea will identify those that she thinks we haven't already addressed fully, and we'll make sure we do that before the end of the webinar. So before we start, I think it's probably a good idea if we both introduce ourselves. So Juan, would you like to go first?
Sure. Ladies first, I guess. Yeah, so for those of you who don't know me, I'm a co-founder with Darwinex. I got into this because my brother, who's a trader, was facing a number of issues when trying to manage money, and he told me about his idea. I liked it. I was going to stay on for a year and a half after getting him enough funds to get this going. It's been 11 years, 10 million euros, and 70 employees since then. Yeah, and you know, it's great for me to have this many people joining today. Last point is I want to have a full disclosure here. We're doing this because we want to have the next crop of good managers on the Darwinex platform emerge from zero in hopefully you know, a couple of years time. So everything that I say will be with self-interest. We want good managers. We want you to grow into a trader so that we can all win-win together. Enough said for now.
Okay, thanks, Juan. As I already said, my name's Martyn Tinsley. I've been a trader now for over 12 years. Initially doing that in my spare time alongside a regular job, but then went as a full-time trader about 3 years ago. In terms of trading style, I've always taken a systematic approach to trading, primarily based on price action patterns and such. I started out initially trading manually, but eventually worked out that that style really did not suit me. And so I then turned my attention to automated algorithmic trading. As anyone who watching the webinar now will know, trading really poses a very steep learning curve. And so it took me, I would say, a year or so to break even, and maybe another year to then start being a profitable trader. And about 7 or 8 years ago, I came to the realization that I wasn't really going to be able to make sufficient profit to do this full time by trading my own capital alone. And so that's when I became a customer of Darwinex to help increase my revenue by getting investor capital. So basically, that's my background. Some of you might recognize me. I also create educational type videos for Darwinex, and so some of you might already be subscribed to the YouTube channel and will already know who I am. So that's pretty much me in a nutshell. And so I think we probably need to make a start on the webinar now. So Juan, I think you have a question for me to kick things off.
Yeah, sure. I think, you know, as an entrepreneur, when you launch something, you don't really know if you're onto something until you see the first customer reactions. And there's something called the eyebrow test. And what the eyebrow test is, if people really like what you're telling them, then their eyebrows go like this. And one of the things that I think has been the most pleasant things to hear from the reactions to Darwinex Zero was when I tell our best traders in the platform, such as Martyn, and the answer was, I wished I'd had this zero thing when I started. And I think the way we want to place this today would be a bit of a fireside chat, open to you guys asking us questions, which we could start by asking Martyn, so what would today's Martyn tell beginner Martyn about Darwinex Zero, and why do you think it's something you should check out?
Well, I suppose really to put things into context, I need to explain what my experience of trading was in those early days. And I don't think anything that I'm going to say is specific to me. Certainly from the vast majority of traders that I've spoken to, they have shared similar experiences that I had myself in their early journey as well. And I knew that I wanted to trade, but I didn't really have that much idea about how to go about it. I didn't have any idea about what style of trading I would eventually adopt. And I think, as I alluded to in my introduction, I openly admit I made mistakes in those early days. I made bad decisions, and I initially tried to trade using a style that I really wasn't suited to. And as a result, like most traders, I lost quite a lot of money. And I think at my low point in those early days, I probably had a 75% drawdown or somewhere like that on my account. And when I hit that sort of, I've lost 3/4 of my capital here that I set aside for trading, I began to take stock and think, I think something's got to change because this clearly isn't working. And reality hit, and what I realized was, and this is personal to me, I had completely the wrong psychology for a manual trader. I didn't have the patience to be a manual trader. I made, I entered trades before I should have. I exited trades without letting those profits run, and so on and so on. Every kind of mistake you can think of, I was making. Hence the problem with losing so much of my capital. And so I made the decision then that I would become an automated algorithmic trader. Okay. And so it was probably 6 or 9 months. I just stopped trading for over half a year while I started to put together everything I needed to build my strategies into an algorithm. So with that in place, and with again an extremely steep learning curve, I gradually began to become profitable. But it probably took over a year for break even, another year to start to become profitable. So I guess for me, having something like Darwinex Zero back then in the context of what I was going through would have been awesome. It would have been exactly what I needed, because the whole concept of, and we'll come on to this later, obviously, this virtual trading account, where it's not real capital that in those early stages you're going to lose, and you can do that just for a subscription fee. That would have been absolutely ideal, because certainly with the subscription fee, I'd have lost a lot less than I did in reality. But also I would say, yes, it's a virtual account, but it's not a demo account. So Darwinex Zero is it's not a replacement for a demo account in terms of just practicing. As we'll see later on, it's much more than that. So it does give you that sort of competitive element. It gives you, which of course would drive any trader to improve and to become better, which is of course is what we all need in those early stages. And also it would have provided this light touch experience of starting to feel what it was like to manage third-party capital, which again I think would have prepared me much more for what was to come in my future journey. So there's a whole bunch of things I think that me and Darwinex Zero would have would have helped me to develop quicker as a trader. I think it would have certainly hurt less in terms of the losses that I made. And so it would generally have been a much better way for me to start trading. But of course, it didn't exist back then. So I had to learn things the hard way with losing my own money in a real account. So I don't know if that answers your question, Juan, but that sort of yes is the answer, and that's some of the reasons why.
Yeah, no, it answers my question. More importantly, though, it's whether it answers the audience's question. So by all means, feel free to post questions as we go on anything that we're saying, and we'll be seeing those, and hopefully we can play back to them as and when we go.
It's interesting, Juan, that I've heard it said quite a lot that all traders tend to lose money initially, and some people have said, really, what you're doing there is you're paying for your training effectively. But with something like Darwinex Zero, it sort of turns that on its head a little bit and takes that pain away. So it provides traders, I think, with an excellent new starting place to start their journey as a trader.
Okay, well, thanks for that. Should we move on?
Yeah, let's move on. So it's probably a good point. I've raised a couple of things there about Darwinex Zero, so I think it probably deserves some better explanation now. So would you be able to provide us with a little bit more information about Darwinex Zero? And I suppose what I'm specifically interested in is the why. Why is Darwinex offering this new service? You guys have been around for 12 years now, and this service is now just being unveiled. So why, and who do you think it's particularly relevant to?
So the reason we're launching this is because we have been going for a number of years, as you said, and we have always been our clients at least second or third or fourth broker, and that's something which by the time they came to us, they had acquired a number of habits in terms of trading, which we think were unhealthy, and you've just mentioned what those habits were, approaching things in the wrong way. And what we want is to reach to tomorrow's traders and hopefully asset managers the day they start. We call it Darwinex Zero because of that. And we've designed everything bearing in mind the experience of all the traders that we've got in-house who said, what would I have liked to do, or how would I like to start back when I was at ground zero. That's the reason. So we want to be the first point of contact to as many traders as possible, so that they hopefully grow up this ladder that we've discussed. And the idea here is how it works is starting with the right mindset, and I'll explain what I think that mindset is, as quickly as possible without undue difficulty, progress hopefully into a trader, somebody who knows that there's risks involved here, that one can lose money and one can lose hopes when doing things that the wrong way. And as the years pass, then people will have their own expectations and their own ideas as to where they want to take their trading. In some cases, it could be a nice hobby. In other cases, it could be a side revenue. And in some cases, it might even become hopefully one of the best managers in the platform. As you know, there's people who've now grown all the way from €0 to 25 million, and there's parties in the platform who can make hundreds of thousands of euros in a good year. So it's a journey, as you said. It has to start someplace, and the way it works is really to start that journey treating one's money like it was somebody else's. Okay, so the idea here is I'm not going to risk my £5,000 because they're mine and I can do whatever they want with them, because you shouldn't do whatever you want with them, because then it leads to these 75% drawdowns if you're not approaching it the right way. And the idea is to try and grow that capital in a sustainable, consistent way, so that eventually we can get trust in our trading. And we thought the best way to structure this was to create a subscription service where one commits to building a track record the same way as they would commit to building a nice body in the gym. And that's the reason for pricing it at this level. And then the goal is to, day after day, trade after trade, month after month, grow as a trader who understands initially risk management, who gradually formulates his strategy until they eventually find out who they want to be as a trader. And all along the way, we have designed the setup as a ladder where strategies can receive increasing amounts of capital as they progress in terms of their performance over time. As you were saying, initially one would try to not lose much, then the next goal would be to hopefully break even and then gradually start making money there. And the way the setup works is there's a number of challenges. The first challenge is the silver challenge, which is that the one that everybody joins and competes by default. The price is there. I mean, there are capital allocations that start with 25,000 euros and go all the way up to 250,000 euros. They are committed for 3 months and pay a proportion of the success that is achieved on the allocations. And to set expectations, it is reasonably doable to receive an allocation in the first months of trading. As one goes, depending on the returns one obtains, one could be looking at anywhere between hundreds of euros, sort of making back the money of this subscription, all the way to a couple of thousand euros in a month for a really, really good quarter. But the idea is that every month, everybody is competing against the market to achieve, hopefully, a consistent, a good return within reason. We're not targeting anything more than 2% compound with this whole setup. This is not about making 100% per year. This is about trying to make a consistent 1-2% per month over time. The difficulty is not the 1 to 2%. The difficulty is getting close to it every month, even in the bad months, and keeping that up for as many months as possible. And as we go, as I said, initially silver, 25k to 250k. Eventually, the elite of that will graduate onto gold, where the payouts and the probability of payouts goes up to 500,000 euros of commitment for 6 months at a time. And as one does that, one's going to get visibility with the Darwinex investor base, which is now at 130 million and growing quite strongly. So hopefully all this adds up. So the silver allocation then becomes gold allocations, which then become investor allocations. And what is minus 38 per month becomes hopefully zero, because one makes back the cost of the service. It could become, I can pay for my AirPods from my trading. It could then become, I want to pay for my 2-week holiday from my trading, and then gradually it could become side income. It could become a bonus. It could become potentially a living. It really depends on how far and how fast one can take the trading to the next level. But importantly, it's all done with the right mindset, which is to say, I'm going to treat 100,000 euros in my virtual account like my dad gave it to me, and I'm not going to fritter that away trying to obtain 1 million in 2 months, because that's just going to result in 75,000 euros drawdown, which is as you described, Martin, in the process. It has to cost something. It's going to cost $40 a month, otherwise one doesn't take it seriously. That's why a demo just gets boring at some point. You have to feel the pain of not progressing, or maybe not even being high up on the ranking. But I've talked a lot, and there's going to be tons of questions. But that's really the spirit of why we've designed it this way.
So Juan, you've mentioned the two sort of tiers there of the Darwinia challenge, and the silver, where so everyone starts off on silver, right?
Yep.
And then you mentioned gold, where they can also start to attract third-party investment from, not from Darwinex, but from actual third-party investors. So is all of that on this virtual account?
That's correct. Yeah. So to be very precise now, so the setup, everybody gets an MT4 or an MT5 account of their, the choice is theirs to make. This account is a clone to the Darwinex broker setup, meaning everything about it is just as it will be when trading live capital. The latencies, the slippages, the market behavior, the pricing,
Charges as well, commission, things like that.
the whole thing. I mean, it's really one-to-one the same as the live brokerage account. The only difference there is that there's going to be a virtual balance for 100,000 euros that one has to trade. Okay, and one tries to trade those as consistently as possible, so that the index, and we're going to get back to that in a second. So this account that one has in MT5 is going to become a sort of a fund that we call it an index or a Darwin. This Darwin starts with a value of 100, and every time we place one trade on the MT5 account, this index is going to move according to the asset that we've just bought. We buy euro dollar, the index will move up and down with 100% correlation to the euro dollar, and so on and so forth. Okay, so one sees two things. One is the MT5 platform, and that's going to drive an index, and this index is the one of which we base the entire setup.
Okay, so maybe it's a good time then to sort of go into that in a little bit more detail. So this index or the Darwin index, and the whole concept of that. If for anyone who's familiar with the platform, they'll know that if you look at your screens now, there are certain elements of the platform that focus in on the Darwin index itself, and there are others that focus in on the signal account. So the signal account is effectively the sort of the behavior and the metrics from the MT4 or the MT5 account. And why, I guess what I want to get from you, Juan, is why is there this distinction? Why is there a need for a Darwin index? Why can't we just measure performance directly from the trader's MT4 or MT5 trading account? And what are the advantages of having this additional layer, which we call the Darwin index?
I mean, there's one big disadvantage, which is having to explain this to people and explain the rationale. Though after, I think it's all advantages. So let's take the step back here. At the end of this ladder that we've been talking about, hopefully there is 50 million of investor capital. Now, when we are at that point, there will be a number of things that investor capital will demand from our strategy, from our track record, before they actually can get there. And let's just go through some of those. Okay, the first one is we, as a successful trader by then, will not want to show our trades to the rest of the world. We will not want to engage in copy trading, because people will then just copy our trades without paying us the success fee we want. And one of the rationales to this is we create this index where which is going to move the same way that the MT5 account moves, but which is not going to show the trades. That's the first point. Okay,
so it's stopping people, if you like, bypassing the platform, bypassing
Correct.
the system.
So they can't free ride off of your strategies. That's the first point. Now, we could just as well do that with the equity in the MT5 account. So that's not the only reason for the index, but it's a start. Okay, so we will. It's a bit like it's showing people can replicate what you're doing on your MT5 account, but they cannot see the live trades. Now, of course, to get to 50 million, the people who invest in your 50 million will have lots of other choices to be allocating their capital, and they will have to pick you and only you as opposed to the others, which means there's going to be a competition around getting that capital, and there's going to be a competition which we want to be a level playing field where investors can come in and say, okay, I'm willing to take a risk in order to get a certain return from this, but I need to know what that risk is. And I want to ideally do this in a way such that everybody is on the same risk, so I can allocate. So if I want to invest between two strategies and they have all been going with their MT5 account for 5 years, but one of these guys trades with a lot of risk and has achieved a lot of return, the other guy trades with very little risk and has achieved very little return, as an investor, I will have to figure out how much risk is high risk, how much risk is low risk, and then do a division between that in order to be able to choose one or the other, or perhaps both. And what we've done with this index, what we try to do is to make the risk in the high risk account, the high risk MT5 account, and the low risk MT5 account converge on a level playing ground in terms of risk as to how much they could move investors' money where they invested to invest in it. And that way, what we do is like, because it's all normalized to a certain level of risk, then the returns become comparable. All that investor needs to look at is, okay, both started at 100. One guy is now at 185. The other guy is 192. I can also see how volatile the movement in the index have been, and therefore my choice is going to be 80% trader A, 20% trader B. And all that is only possible if we create a normalized index that is apples to apples comparable for risk and return. Now that's when we get the investors. Now, as we've mentioned, silver, there's two components to silver. One is getting a certain rating in the month, up to 75. We have a guaranteed allocation. There are certain elements of drawdown and return that factor into that. So again, we need to do that on an index that is the same across everybody, because what you wouldn't want to do is that somebody trades high risk and it's a lot easier to get the 75 than with low risk.
Okay, so Juan, you've just mentioned something different there, which is this concept of a rating.
Yeah.
Okay, because you said, you know, if traders get a rating of 75 or above,
yeah,
in any month, they're guaranteed this Darwinian allocation. So how does that rating relate to the Darwin index?
Yeah, it relates. I mean, the rating is based off cumulative return over a certain number of months and a certain drawdown over a certain number of months, and both of those are a function of the risk that one takes. So a guy with a high risk could make a very high return, but potentially also have a very large drawdown. Same for the other guy. And this is already a place where this normalization of the index is bringing in this level playing field on account of the getting to the 75 in the first place. And then thereafter, as you know, there's a competition for the higher allocations up to 250,000. And that's a function of the ranking of one's Darwin as a function of the kind of this rating. And again, we need to create this level playing field, because otherwise the whole thing is distorted, and we don't want to give incentives for taking higher risk or lower risk. What matters is risk adjusted return.
Yeah, I suppose another way of looking at it is that all traders will have a different appetite for risk. You know, there'll be some traders who are extremely conservative, and they will be operating in their signal account with a very low level of risk. Whereas you will have other traders who just naturally want to have, want to trade with a higher risk, and you know, within reason, both of those approaches are absolutely fine, because all traders are different, right? And they all have a different makeup. So what you're saying is really based on the rating calculation and the way that the Darwin index is calculated. It caters for that, and it allows both of those two types of traders and everyone in between to be effectively classified on an equal apples for apples basis. Yep.
Yep, but it's that, of course, and then there's also additional considerations. So one can trade high risk with a certain trading style, and there are different trading styles. Somebody could be placing 600 trades a month because they've got an algorithm that's in the market 24/5. Others could be just trading the news. There are no restrictions whatsoever as to how one can trade. All we do is we calibrate, and this is also going back to this training phase. Our indexing engine learns about the trading style in the first 10, 20, 30 days of trading, so they understand, okay, so this guy trades this way, this many trades, this much leverage per trade, this much, and then that way he can take the index engine takes that and says, this is the way that a trade on the MT5 account, the signal account, is going to translate into a trade by the index. Same thing for all other participants. At that point, everybody gets put into this level playing field, and then we're all competing for allocations. Initially, the silver and gold allocation, eventually the investor allocation. But from day one, it is all going to be about creating an index that grows as consistently around 1 to 2% per month as possible for as long as possible. And then having, I guess the point I'm trying to make is there's no extra points for creating the highest percentage return on the MT5 account, because that's not going to go anywhere in terms of the allocation. The important thing is one trades consistently with as consistent as possible a trading style, so that eventually one converges on a strategy that investors will hopefully want to back someday, or at the very least will allow us to trust our trading and our instincts when we go trading live with our own capital.
Okay, you said something there that I want to sort of dig into a little bit more. You said that the risk engine learns how each individual trader trades, so their characteristics, the kind of, the risk that they encounter, the frequency of the trading, and so on and so on. Mm-hmm. Is there anything it uses that for? Does the Darwin get adjusted in any other way based on, for example, if the risk engine suddenly saw that the trader was trading in a very different style to what they have done historically? Mm-hmm. Is there anything there that happens in order to sort of protect the Darwin?
Okay. So one point I'd like to make before is like this risk engine doesn't care one hoot about how you trade, as long as whatever you do it consistently. Okay, this is the key to things. You can place 3,000 trades, you can place 30 trades, but if you're someone who places 30 trades a month, then you can go place 50 trades a month or 60 trades a month, and the thing will allow for it and will treat the conversion from the NT5 to the index the same way. But what's not okay is if you normally trade 30 and all of a sudden you come up with 3,000. Okay, and at that point, a hypothetical investor, e.g. your dad, would go quite nervous saying, hey, I gave you 100,000 euros for you to trade my account. You were trading with 30 euros, 30 trades a month. You're now doing 3,000. What on earth is going on? I didn't give you, you told me you were going to trade in a certain way, and now you're trading in a different way. And what this thing will do is really scale down the risk that you're taking, because it will lose trust in you if you change your trading patterns. If you don't, doesn't really matter, but if you do change your trading patterns, it will give you less leeway than otherwise.
Okay. No, that's clear. Thank you.
If there are any questions, this is complex. So if anybody is sort of saying, what are these guys smoking? What are they saying? I want to understand. Again, this is a lot more easily understood if once one signs up, because there is in the interface, there's a functionality that tells you real time what your index is doing as a function of what your MT5 is doing. So you can very quickly see, I've done this on my MT5. The index is done that on the. It's not like it's a black box. It's basically telling you what's going on at the other end, and as you go, you basically just see what's going on and get a feeling for it.
There are two questions, if I may interrupt, Juan, so we can, answer it now. Mm-hmm. Ian was asking us, these are virtual accounts. Do you need the constraint of working to the UK retail margin requirements?
No, this doesn't really apply in that way, but bear in mind that and we'll discuss that later, at some point you will want to graduate onto some live account, and then the minute you graduate into a live account, then you'll be bound by whatever regulations the FCA includes. So the answer is, it is a virtual account. Those constraints do not necessarily apply, and I'll get back to that in a second. And but you will want to take that track record to a live account at some point, and at that point those constraints will apply. That's the first point. And then the second point is, to achieve the 1 to 2% or 3% consistent returns that you want, the UK account limitations are way more than plenty. So the answer is it's virtual account. You could trade it any way you wanted, but the point of this whole thing is to get paid by us for trading consistently in order to eventually move to a live account. And trading outside of those parameters is not going to get you there, or doesn't help get you there.
Thanks, Juan.
So I guess that the answer is you could, but it defeats the purpose.
Was there another question, Alethea?
Ian was asking also, is there any margin calculator available?
You've caught me, Martyn. I mean, to the extent that what you're training with is the MT5, a standard MT5. So if there's a margin calculator included in MT5, I'm not a trader, then you've got it. If there isn't, then no.
I've got a feeling. I've got a feeling it's 30-1, but I'm not sure. We'll have to come back. I'll check.
Well, 30-1 for sure is the UK limitation on leverage. It depends on the pairs or on the assets, but yes, if that's what Ian means, then yes. Again, it's a clone of the Darwinex live setup. It's no different to that on the MT5 side of things.
Okay.
I hope Ian, that answers the question. Like, do let us know, because we don't want you to get to kind of feel stuck on account of bad answers.
Yeah. Okay. So you've covered a couple of things there, like consistency and different things that the traders should be looking for on this virtual Darwinex Zero account. What I'd like your take on, I suppose, Juan, is, is there anything else that you believe a trader how a trader should behave, and how it should affect their behavior differently being on a virtual account rather than being on a real money trading account? Or should they be treating this account as though it is a real money account and just, what's the sort of the reasoning behind how they should be behaving, the kinds of things they should be doing, and why, in terms of building their track record and so on?
So I guess this whole thing boils down to psychology, right? As you were mentioning before. One thing is to be the world's greatest hero of demo trading, and then the minute one puts live capital at risk, then the gut starts coming in. And as you were saying, Martyn, the gut, if you trade with a lot of risk, can play havoc on your mindset, in the sense that you will cut your winners short and let your losers run, and that's the last thing you want, because that's stressful, which leads to bad behavior and so on and so forth. And the idea here is to introduce a mindset that forces us to think of not losing monies, but opportunities of credibility. So one, the money is already lost to the extent that every month is going to cost 38 euros. So that there's no, you can do whatever you want, 38 are gone. So once the 38 are gone, then there's no, you're not going to be thinking, oh my God, if I do this, I'm going to lose X. Oh my God, if I do Y, I'm going to lose Z. No, whatever you do, you're going to lose at most 38 euros. That's it. And then the goal.
You say at most there, because obviously, hopefully, one of the first milestones that a trader wants to reach is that the allocations they get on Darwinex Silver will hopefully start to cover the cost of their subscription and so on, and then obviously over time exceed that. But yeah, at most we're talking 38 euros. So.
Yeah, so I mean, to come back to the numbers, we're basically saying the goal is to make, say, 2% on a consistent a monthly basis as possible. 25k times 3 months, because that's the allocation, times 2% means 6% on 25k times the 15% profit participation. That could become 230 euros on a per month basis. 230 euros is basically, what is it, like 5 times, 6 times the monthly allocation. So if one gets one allocation and gets that quarter right, then the service is being free for 6 months, and that's every month. So if one does that every month, you could be making $200 a month consistently, by which point you will have built up the trust and hopefully the capital to go into a live account, which will take on the same track record, just unchanged, and will transform your trading into a live account with the same conditions. But the mindset here is to risk something, which is not just capital, but time and some money, before you go into this crazy element of risking more than you can take and just blowing up valuable savings without knowing what you're doing. I'm not sure that made a lot of sense, but that's the idea. So to create
I think effectively you're saying, look, traders should treat this virtual account with respect, and that, you know, this is going to be part of your track record going forward in you know, future stages of your journey, when you are participating in Darwinia Gold, or when you know, get a real money account, you can transfer that track record over. And so really you need to treat it as if it is a real money account with the same level of respect, right?
Yeah.
Yeah, okay. So I want to ask a question now.
You're basically risking, you're risking your own confidence in yourself and your future credibility with investors. In addition to that, you're investing 40 euros and behaving that way, but you're not risking capital. You're not ready to risk yet, which is the whole thing we don't want. Personal capital, you're not really ready to risk yet.
Sure. Okay. So there's something you've talked about a few times, which is the concept that what traders should be setting as their target is 1 to 2% per month.
Yeah.
Now, I'm interested. Why have you set it at that level? What's so special about 1% or 2% per month? You know, how have you come up with that figure?
No, it's actually quite simple. So over the years, we've had tens of thousands of track records trying to get allocations from our investors via this setup with the index. And the best that the best guy has achieved, and he's got a 7-year track record now, is something like 20% compound over the years, so per annum. So if you take 20% per annum and boil it down to a per month figure, it's going to be anywhere between 1 and 2%. That's where this comes from. It's basically the best that the best trader so far has achieved over the years, and we know that's good enough to most, because he's now got 25 million of AUM. So delivering at that number, he could be making anywhere between 750,000 euros up to $1 million a year. So that's kind of that's the current yardstick. We hope that people will beat it, but I think it's unrealistic for anybody to come in and say, I'm going to make 4% per month compound for 7 years, because that, I'm not saying it's impossible. I really am hoping that it will be done by somebody, but that's kind of an order of magnitude away from what the best guy so far has achieved. So we'll be more than happy if somebody achieves 1 to 2% per month on a compound basis. And again, delivering 1 to 2% per month every month, no one has succeeded in the entire history. They say, like, even this guy had a 17% drawdown. Like, it's very hard to see any traders on the Darwinex platform who's had less than 10% or 15% drawdown. It is very rare, and you only see that for people with short track records, meaning their 16% is ahead of them, but it guaranteed to come.
And that's drawdown on the Darwin index, right?
That's drawdown on the Darwin index, correct? Yes.
Yeah. Okay.
Mm-hmm.
So that makes sense, and as you've mentioned, the best trader. I guess the key thing there is that he's delivered this 1 to 2%, but the key thing is that it's been very consistent, hasn't it? So that's been a consistent value every month on month, and well, I think one of the reasons.
So it's done for a very long time. So it's 84 months. It's not like 1 or 2 months. It's 84 months. Yeah.
Right. Okay. No, that's cool. Yeah. All right. So I just want to know. I'm going to show a couple of graphics on the screen plan that I know that you wanted to talk about. There's this one, which is the first, and then you've got this one, which is the second one. And I just wanted to sort of ask you to talk through these two slides for a moment, because I think there's some very good points to be made here.
Yeah, I mean, this is one I've used at an employee offsite to discuss our first 10 years of a company. Because in many ways, starting your trading career is a bit like starting your startup, right? I mean, that's basically what you're doing here. And what we've got in front of us is the plan, which is this climbing this mountain at a rate of 1 to 2% per month. And that's basically the plan. It looks like, simple enough. It is uphill, of course, but you pedal enough. And 1 to 1, the market plays your way, and you're going to get there. So that's kind of the plan. This was my PowerPoint pitch when I pitched to investors. That was the plan. And then if you go to the next one, then your plan faces reality, and you'll have times where things seem to be going your way, and there'll be times where you'll basically say, "Oh my God, I'm going to quit this thing, because why should I ever approach an MT5 terminal ever again?" So that's, it's just part of the journey, and that's the beauty of it. It's to learn. I mean, we were talking about you're currently in a stagnation period, Martyn, with your own strategy,
Yep.
and so I guess you're somewhere, either in the trough of desperation.
I'm down there with that shark at the moment.
Yeah, correct. So and it's part of the journey, right? And it's the important thing is that you don't just say, screw it, I'm going to quit, or screw it, I'm just going to lever 500 times to 1, and hopefully we make good on all these losses. Because if you do that, then that's when you'll never live to see the bridge after that, or become the bear at the finish point. That's the goal. So it's you're risking your credibility. This is the track record. When you get to be at the bridge level, they'll say, okay, this guy, he's had his drawdowns, but he's made it back from each of them. And he's a very mature individual who's learned to survive the trough, the snow, the tiger, and the shark. So I know he may or may not make me money, but for sure he's not going to just throw everything overboard because there's a snake down there. That scares him a bit. I think that's the spirit, right? To understand that one has to grow.
Yeah, I think so. And also, I mean, I've been in many drawdowns in the past, and fortunately recovered from all of them to make new highs. And for me personally, and certainly other people I've spoken to as well, those times when you're in drawdown often tend to be the times where you, if you like, grow most as a trader. So because you start to, when things are going well, you can almost sort of sit back a little bit and just take things as they come. But when you are in drawdown, it starts to make you and force you to consider, what can you improve? How can you change something that you're doing to make it better, so that you reduce the chance of this in the future? And so for me, when I have been in drawdowns in the past, that's when I've implemented some really great changes to my algorithms and so on. And for discretionary manual traders, maybe that's when they start to do things in a different way, and to take a different process and so on. So I try, although it's hard, because whenever you're in a drawdown, it feels absolutely terrible. But I try to convince myself that, well, look, while I'm in this drawdown, there's lots of positives to come out of this, because I've changed X, Y, and Z, and that will serve me well in the future. And that's certainly the case for me, now in this drawdown. I've invested fairly heavily in a new way of doing things during that time. So I am still optimistic, and like you say, I guess this is one of the things that determines which traders eventually go on to succeed, and which of those maybe give up along the way and decide that trading isn't for them. And I think one of the things, and I alluded to this earlier with Darwinex Zero, is that Darwinex Zero gives you that ability to maybe ride out those storms a little bit more easily, because first of all, it isn't your own capital that you are you're losing there during that time. So hopefully Zero will help with this.
Yeah, I mean, I think one point I was just thinking as you spoke is that, look at this guy with a bicycle. So he's going to come in with the Zero and his plan. He will go up, everything looks quite all right, doing good progress. Maybe I just land on a location and I make some money off it. And then for some reason, here comes the trough. I fall down this thing. And, at that point, the good thing that's going with you is that, okay, well, maybe this is going to be 3 or 4 months. 4 months times 40 euros is 160 euros that I've so-called thrown in the bin, but I continue to stick around, keep going, and I make it back to this forest that we've got here on the left. And at that point, because I'm sure that's going to be a question that comes up back later, at that point, I basically understand what this is. I've made some money at the back of it, and above all, I've gained a lot of confidence in the fact that I didn't completely panic out when things were going downhill, and that I did manage to make it back up. At that point, maybe I'm confident enough to say, look, I'm ready to take the leap and start trading live capital. Okay, so this is the decision, because at that point one can say, okay, well, it's been 6 months, 250 euros or something, but now I just think I can put in 1,000 euros. Maybe I've made some allocation money by the allocations. Maybe I had my dry powder stashed there anyways until I figured out whether this was for me or not. Maybe that's the time, right? Or maybe you just want to wait until you make it back to the tiger. I mean, it's anyone's real call. But the important thing is that as one gets time and one builds a track record, it's basically trust and knowledge that one's building, so that one can become a trader at that point, as opposed to a gambler, because you have realistic expectations, you've had enough experiences, you figured out a system that takes you there, you understand what happens when the going gets tough, and yeah, you're probably ready at that point.
Okay. So you've talked about traders, maybe moving on after Darwinex Zero to a real money account. So could you sort of give your view on, there may be people, I guess, who don't want to do that, and I guess it's perfectly fine if someone wants to just stick with D0 for as long as they wish to, then that's fine, right? But so what's the advantage of someone migrating from Darwinex Zero to a real account? Why would they do that?
I mean, there's a pure financial consideration, and that is that Darwinex Zero is going to cost 38 euros a month every month, and what it offers is the same as a live account would offer for so-called free. So at some point, one will say, does it make sense to be paying 400 euros a year for a service that one can get with a live account with 1,000 euros? That's it's going to be anyone's decision. We will certainly not rush it on anybody, but it's a consideration for sure, right? Because why pay for something one's getting for free? And at some point, one will want to grow his own capital anyways. So, but
so it's that cut-off point really between am I still losing money, or am I now a profitable trader? And that's really the distinguishing cut-off that would make that. Okay.
Or maybe you're just kind of psychologically ready to say, okay, 38 euros is just not enough skin in my game. I want to learn what happens later, because at some point, of course, you will be managing hopefully millions of euros, right? And at that point, there's going to be a lot of pressure, in the sense it will not be the loss of the 38 euros. It will be what happens. And I just got off the phone, a professional asset manager whom I asked, what's the thing you hate the most about your job? And he said, taking investor calls, because I've been in a stagnation period for 6 months now, and some of these people came in right at the point where the stagnation period started, and I just, I have to explain to them why this is the case. And every time I see the phone ring, I know I'm in for, either for bad news or just having to put up with some abuse here. So that pressure will be there. It will not be about the 38 euros or the 5,000 euros in my account. It will be about my livelihood as an asset manager. And so the stakes, as one progress, the stakes get higher. Of course, the payouts get higher. But the goal here is to gradually grow into the trader that we can be in the process.
Okay, cool. All right. So I think we've probably spoken for quite a long time now, and it's probably time to think about some of the questions that people have been asking, both on the call today, but also I know a huge number of questions have been coming into your customer services team, and we have a list of those questions, which hopefully have some commonality with the questions that have been asked today. But there's one question that has been extremely prominent, and so I think we'll hopefully ask this one first and get everyone's understanding on this right, and then I think we'll hand over to Alethea to cover the questions that we haven't spoken about already in the webinar. So the question really that's being asked an awful lot by potential customers who want to understand more about D0 and the sort of the timescales that are involved. So one question is, how long will it be after signing up, before a trader can expect to firstly start receiving allocations from Darwinex Silver, but then secondly actually start earning revenue from the profit that they then generate on those allocations? So the 15% profit that they'll get to keep based on what they make on those allocations. So two things there, both in terms of timescales. What's your view on that one?
So I'm going to say the hated answer, which is it depends. So that's kind of what, but I have to say that because that's the case. It obviously depends on the performance that one manages to produce and sustain. What I can say, it is statistically possible to make this from the first month. It becomes increasingly likely as one posts positive returns, but it's not like people will have to wait for years. No, that's not the case. It could be one has a realistic shot at landing an allocation from the first or the second month, if that is a good month. So that possibility is there. Of course, that allocation doesn't translate into money until you've grown the capital for the 3 months after that. So it's really going to depend on the quality of the strategy and whether the market environment is suitable to it at that point or not. But we certainly think it's for sure very likely, if one trades well, that the service will be free. So one could accrue the track record in the first year without paying for the service, because one will make back from the allocations what more than one's put in terms of the monthly fee. And then thereafter, as I said, the goal is to the minus 38 kind of stop loss is guaranteed. The goal is to make back a portion or all of that 38. And then, as I said, the next goal is the Apple pods, what's it called, the Apple AirPod. And then once when you're sitting there with the Apple AirPod, then the next thing is planning the holidays, because you're going to make it with the next allocations and keep going from there. But the answer is, it is going to be years in terms of growing, because you've been going at this for 8 years, right, Martyn? Because you like it. And then I think it is very realistic to make back the cost of the service. It will be free to you the minute you do things with have a brains, and then thereafter the payouts, the stakes increase at the rate at which you produce alpha, because that's what the whole thing's meant to. The ladder is there. The first step is not 2 meters, so you can jump, or you can make it past the first step or the second steps. It's not like you don't have to be a Superman to make it. The difficulty is to gradually climbing up more and more steps in that ladder. Hope that answers the question. Either way, I mean, I think a lot of these things are done more easily. I mean, it's like just sign up, get a feeling for yourself, and then there's no obligation to stay if you don't like it. I think that just give it a go.
I mean, one thing I think it will be very useful for traders to do is to, the whole concept of Darwinex allows them to get some kind of feedback month by month about how they're progressing. So in month 1, they might finish in position 200. In month 2, they might work their way up the leaderboard and find themselves in position 100, and so on. And so it gives them a way sort of gauging how they're progressing as well, which I think is a really good point and can be very motivating for a trader. So that sort of competitive element of competing almost against themselves to get up that leaderboard is something that I think shouldn't be underestimated. It's very valuable.
Yeah, now there's that, and there's also the feeling of the loneliness, no, right? The loneliness of the long distance runner. Like you just got hammered, and it's like, oh my god, this and that, and then you just look at the ranking, and you realize everybody got hammered because it was it was just this move that no one was expecting. So you go, okay, well, we all get hammered and we just build up and keep going. Or conversely, I've done very well because I just lost a bit and everybody else got hammered. Or the other way, I just made some money and everybody else just made a killing. So it's basically giving you a relative yardstick to see what's possible. Because the other interesting thing, I believe, Martyn, you're going to be in this thing as well, right?
I am. Yep. I'm going to give it a go.
Do you have a ticker already?
No, not yet. No.
Okay.
So I have the account, and I'm still in the sort of the training calibration stage. Yeah.
Okay. So yeah, there's going to be Martyn. There's going to be a kind of a number of guest stars in the thing, including the best traders in the platform, so that people can see, how am I doing relative to the other guys. And the goal is, as a kid, you see the guys from the marathon running by. It's like how many meters can I hold on to these guys and beat them, right? So like, okay, they're doing 42 kilometers, but I'm just gonna try and beat them for 100 meters. Yeah, and then you go for 200 meters, then you go for 500 meters, and eventually just start the marathon and hopefully beat them. So it's the same thing. The top guys are gonna be in it too, and you can really benchmark yourself against them from day one with a realistic shot at landing an allocation from pretty early on.
Okay, excellent. All right, so Alethea, I'm going to hand over to you and ask you to put forward some of the questions that people have been asking.
Sure. You mentioned the training phase, and there were a couple of questions regarding the training phase because might sound a little bit confusing for some. So if you could, Martyn or Juan, explain exactly what's the training phase and what does it involve, so it makes pretty clear what's this stage.
I can take that if you want, Juan.
Mm-hmm.
So basically, the training stage, it's not really about, it's not training of the trader. It's a period of time where the risk engine that sits behind this that Juan spoke about earlier on, the thing that effectively produces the Darwin index from the trader's signal account, with the risk adjustments and so on that have to take place. It's a period of time that allows that risk engine to learn the behavior of the trader and to effectively perform a calibration so that when the Darwin ticker is then eventually created, it already understands what the characteristics of the way that trader behaves and trades is, so that it can more accurately produce a Darwin index that is reflective of the trader's performance. Because if you think about it, if the Darwin index was created straight away, it has no idea what risk level that trader's operating at. It just simply doesn't know, and so it couldn't create that index. And so it's a period of time where it needs to see, a number of trades that the trader is executing on their account to learn that behavior, so that then when the Darwin ticker is created, it has a higher level of accuracy. Now, of course, the process doesn't end there. The risk engine will continually monitor that trader's behavior, every single trade on the account, and will adjust accordingly. So, for example, if the trader maybe increases their risk appetite a little bit and starts to increase that, the risk engine will recognize that, and in order to provide that consistency of risk that Juan was talking about, it might then have to reduce the risk on the Darwin a little bit. Whereas if a trader reduces their own risk on their trading account, it might have to increase the risk a little bit in order to give that level playing field. So it's really, there's nothing special about it. It's just the start of that process where the risk engine is continually monitoring and adjusting to provide that level playing field. And it's just that initial period of time it needs before the Darwin index can be created. Is there anything that you would add on to that, Juan?
Yeah, I think just yeah, I mean it's a great explanation, but I think there's a lot of people who come in thinking of these kind of prop funding programs and so on. So to be very, very kind of blunt about it, so we should think of a better name, because you're not really getting trained in any way, shape, or form. All you have to do is just trade your own way to teach the engine how a trade on MT5 is going to translate into a movement of the index. That's all there is to it. You can't fail the process. It is not a test in any way, shape, or form. It's just a way to get you onto the level playing field where you're going to compete with all the others on an apples to apples basis. That's all there is. And for the teacher to put you into the class at the right level, it has to know how you trade. But that's it. You just have to trade the normal way. There's no, yeah, it's something which affects us. You should just trade your MT5 the way you would trade the MT5, and then you'll see that your index is there because the engine has learned how you trade and say, "Tada, this is where you are." Nothing else. You can't fail it. You can't. You know, this is, yeah. You can't fast track it or anything. You just do what you would normally do. That's it. You're being observed to be put into the level playing field. Nothing else.
Okay, great. There's another question about how the capital allocations work. So maybe we can, extra clarify this point and how performance fees work.
Okay, so so let's start talking about it. The basis for this is the behavior of the index. Okay, the quote of the index. The index will start at 100 from the first trade, and it'll start going up or down to the extent that you're producing return or you're losing some money. Now, as and when this index starts generating return and has drawdowns, that is going to generate, there's a function that we call this rating, which translates the gradual movements of the index onto this rating score, which each month will determine where you stand in this hierarchy. So the first point about the allocation is that the minute you hit a rating of 75 or more, you are guaranteed, or there's an automatic allocation of 25,000 euros. Okay, the only driver there is, have you hit 75 or not? If you have, 25,000 euros for sure, at least. If you haven't, then unfortunately no allocation in that month. And then thereafter,
and it doesn't matter, Juan, how many people make that 75 rating. Yeah, there might be 1,000 people. They will all get that minimum allocation.
That's correct, yes.
Okay.
Because that's that's already reflective of a decent enough performance. Okay.
Okay.
And then thereafter, it's really there's a leaderboard that you can see where the top guy will land an allocation of up to 250,000. So you kind of incremental from there. The better you've done relative to the others who have all achieved a 75 rating, then the higher the allocation you're going to get. Okay. So I think that explains the allocation of, say, 250,000 for argument's sake, because you've been the first. So you achieved a rating of 75, which meant you had an allocation of at least 25,000, and then you've actually not only that, you've ended up top from everybody else. There's an allocation for 250,000 euros. Okay, now that allocation is now committed for the next 3 months. Okay, so you have 3 months to grow that allocation, which will stay with you for the next 3 months regardless. Okay, so it is guaranteed to stay with you. There's nothing you can do in the meantime that will lose you the allocation. It's there with you to stay. Okay, so and then it's really a question of how the index behaves. Okay, so let's say you receive the allocation, for argument's sake, when the index was 110. Okay, so that's kind of day one of the allocation period. You've got another 3 months to grow those 110 into hopefully something higher. Okay, let's say we have grown that by 5%. So you started at 110 and you've grown to 115.5 by the end of the evaluation period. That's a 5% return. And that 5% return has been achieved on 250,000 euros. Okay, so you have created 12,500 euros worth of upside to us, your investor, with 250,000 euros. And now out of that, we pay you 15%. Okay, and what that means is the day
So 15,
that,
so they'll get 15% of the 12,500 euros.
correct, which is 2,250.
Okay.
Okay, so at the end of those 3 months, we will pay into your account 2,250 euros. Now, nothing stops you the month after from having landed another allocation, which will then expire 3 months after, so that you could make 500 euros for that month. So you could make 2,250 euros on month 4 and 300 euros on month 5 and nothing on month 6 and 1,000 on month 7. So each each allocation can become into a cash payment 3 months down the line, which is going to be only a function of how much your index grows. Meaning you compete with a rating and the others to get the allocation in the first place, and once you've got the allocation, it's just 100% down to you.
Okay. Sorry.
Yeah, people should look out for this logo. I think that's the logo you'll sport when you join, right, Martyn?
Oh, yeah.
Yeah.
Okay.
Okay. There is a question that says whether there are any disadvantages to Darwinex Zero compared to Darwinex Classic.
Yeah, I mean, the only disadvantage is that it costs 38 euros per month, whereas you would get that for free with Darwinex Classic if and when we merge both services. But beyond that, there's none. The advantage of Zero over Classic is that you can go from Zero to Classic, but you cannot go from Classic to Zero.
And in Classic, your Darwin is open to investment from day one.
Mm-hmm.
Just to clarify there, Juan, I mean, you're talking about migrating your track record there, aren't you? So you can migrate your track record from Zero into a Classic live account.
Yeah.
But there's nothing that would stop an existing customer of Darwinex Classic from also having a Zero account.
They can, but I don't think it's possible to transfer the live track record. I mean, they would have to start a new track record. You can have both. I mean, in many cases, I've already seen that many customers, I mean, including you, are basically getting a Zero account in addition to the live account just to test some new setup, or they say, okay, look, I don't want to fund this for 1,000 euros. It's better for me to invest 90 or 100 until it's all tested before I actually fund it or something. So, or I've got this algo and I want to test the execution in a live environment, how it would fare. Well, then, they do it this way. So there's different use cases. The trading environment is exactly the same, as I've said. The only difference in one case is you're going to pay 38 euros for sure. In the other one is you're going to risk live capital. But the offering is the same in both instances.
Okay.
One thing we haven't discussed, which is potentially a question, is that we will connect both offerings, and Zero will be available from the Darwinex platform as well. So it's just going to become an additional, it's a standalone product in its own right for those who cannot access Classic, but it will be part of the product palette of Darwinex, where there'll be Darwinex Classic and there'll be Darwinex Zero, depending on whether people want to go one way or the other. But the only difference is Zero costs 38 euros a month. The other one is included with the live subscription. So the offering of the benefits of Zero will be included with a live account.
Okay, so just to be clear there, in terms of Darwinia, there will just be one Darwinia.
Correct. Yeah, there'll be two gateways onto Darwinia. One will be Zero, the other one will be Classic. And as Alicia was saying, the other benefit of Classic is that one will be available to investors from the get-go with a live funded account, whereas this will only be possible for Zero clients who have reached gold.
Okay, and let me just ask the last one. I have it here. Okay, yeah. If someone was asking if you had any tips, both of you, Juan or Martin, you as a trader, any tips to start with the right foot in Darwinex Zero? If you can maybe, you know, help the audience with some tips, if any.
Can I go?
Yeah, sure. Yeah.
So, I mean, the tip is you're trying to achieve 1 to 2% per month, and it is awfully hard to make that every month. So don't try and impress everybody trying to make 50% by levering up beyond the FCA limits or whatever, because that's going to add zippo to your chances of landing an allocation, because it's all just about the index. So really start thinking, my dad just gave me 100,000 euros, which is his pension. And I'm going to trade this very, very, very carefully, trying to get a realistic return on his pension. That's the thing. This is not 1,000 euros for me to fritter away. This is my dad's pension, and you keep going like that, and eventually, if you're good and you stick with it, you'll get places.
I suppose mine would be an extension of that, you know, because if you do, you know, leverage up and start to place those big trades, then yes, you might get lucky this month, but also when the market goes against you, you're going to find yourself in a very large drawdown. And you know, if you think about this, if you're in a 50% drawdown, so your current index is 50% what it was, you've now effectively got to double. You've got to make 100% in order to just get back to level. And you know, believe me, that's a lot harder to do than it is to lose the 50%. So you know, you've got to be really careful, and you've got to think about, I guess, what that's going to look like on your track record as well, because you know we've talked about Darwinex Zero as being, if you like, a stepping stone. You know, it's that first step on what could be a very, very long journey for you as a trader as you go through the different, you know, stages and start getting third-party investment and so on. And so what you don't want on your track record is that 50% drawdown for everyone to see. And so really it's this, I mean, the way to avoid it is exactly the same as what Juan has just said, you know, keep your expectations moderate, aim for that 1 to 2% per month on average, try to get that consistency, you know, and to get that, you're not going to have to put on huge position sizes. And of course, when things do then go against you, that isn't going to have such an adverse effect in terms of taking you into drawdown, and it will make your track record look better. So I guess it's the same point, but you know, avoid drawdowns at any point you can.
Okay, so I mean, for my part, I really want to thank all the people who have come here and actually made it through to the end, which I believe is most of the people that started. So thank you so much for your patience. If you have any kind of feedback or ideas that you want to share with us, by all means do. This is this is what makes us understand how you guys tick. There's one question I would like to ask you, if you're still there, which is how you heard about Darwinex Zero. If you can just type that into the chat box, that would be very, very appreciated. And yeah, for my part, I really look forward to seeing you guys over the coming months. The last point is just give it a try. It really is a lot more. It's a lot easier to understand once you're in it than it is to hear two blokes talking about something which sounds very abstruse but doesn't really need to be. It's basically, I mean, the long and the short of it is, take 100,000 euros, treat it like it's your dad's pension, and then keep going at it. You will make mistakes, you'll have some wins, like everything in life, and if you keep sticking at it with the right mindset, eventually you'll see how far you can go. That's that's the idea.
That's great. Well, thank you both for presenting this webinar. Thanks for the audience to being there. And I just wanted to invite people to check the website. All the information is always updated there. As Juan said, you know, you can give it a try, pay the sign-up fee, it's 95 euros. You have all the training phase included to go on your own pace, and then you have also the first participation in Darwinex Silver included with the 95 euros. So you will start paying your subscription just in your second participation of Darwinex. So just give it a try. You can always email us to info@darwinexzero.com if you have any other questions that may arise these days. And hopefully we'll see you very soon in Darwinex Zero.
Topping the leaderboard.
Okay, thanks everyone.
Thank you guys.
Thanks, guys. Thanks, everyone.
Bye-bye.